It was an 80,000 Bitcoin whale. An OG hodler who had died and his heirs were the ones selling the 80,000 coins. We're just seeing these huge unlocks. I think we're going to just see more and more of those. The volatility is coming down over time. But now it's kind of more like this steady uptrend with consolidations, and the pain you pay is the patience. It still does mean very, very strong returns. Imagine if you could borrow anywhere from 0 to 10%, borrow fiat, and buy Bitcoin, growing at 30% per year for 10 years.
What do you think people are misunderstanding? Stephan Livera, good to see you again. Thanks for joining me today.
Mark, thanks for having me back on.
Before we started recording, I was asking you some deep technical questions because you're one of the most technically inclined people that I know in the Bitcoin space. You've been around doing this for a really long time, from a technical side, a macro side, Bitcoin Treasury side. I mean, you cover a lot of ground. So I want to cover a lot of ground with you today. First thing, at the time of this recording, here we are, October 3rd, and Bitcoin is breaking out. We're almost just a skip and a jump from an all-time high, which I think was 123, and we are sitting at 122 at the time of this recording. The macro space is pretty interesting right now. We're sort of what might be the end of this 4-year cycle. We should be peaking out right now. On-chain indicators show that we're maybe only halfway through the cycle. We're not even near the end of the cycle. The U.S. Fed is easing. Gold is rushing to an all-time high. But then there's a lot of indicators, economy's weakening, things like that. Where do you think we are in this macro cycle and Bitcoin's price sort of in this 4-year cycle right now?
Yeah, well, like most people, I was critical of the super cycle idea last cycle. I was saying, no, guys, just look, we're going to do the same kind of leverage up and leverage down again. You know what? I almost do believe, it's hard to say, right? But I think we may have over-indexed on the 4-year cycle now in Bitcoin, right? We may think, oh yeah, it's always just going to do, this kind of 3 green, 1 red thing, right? Because a lot of us would have come into this year thinking, oh yeah, this year's going to be a big one, and then maybe next year's going to be a down year. Now, I'm kind of turning my mind around a little bit on that. I'm not saying 100% for sure, but it seems that way. It seems a bit more like, as I'm sure you heard, people were saying when the gold ETFs came out, that gold had this kind of secular 8-year bull run, and yeah, there were some pullbacks on the way. Maybe Bitcoin is going to mirror that behavior a little bit more. And it's just kind of, everything is macro, So I think this kind of idea of the typical 2013, 2017, 2021 kind of big bull run and a big crash at the end, maybe that's actually what changes, And we have to just be flexible and understand that it's not always going to be exactly the same. We have to understand what are the conditions that have changed, right? And I would say it's fair to say the institutional environment is different this time around, right? We have large US Bitcoin ETFs that are responsible for a large amount of buying. We have all these Bitcoin Treasury companies. Obviously, you're involved in one, and I think there's just such a big shift in the mindset. So many more people are seeing it as a savings tool. So I would say that's probably the main thing in terms of Bitcoin macro per se, that I think maybe we're not likely to get a big 80% drawdown. Maybe it's who knows, 50%, only 50%. But I think we're just kind of in this broader uptrend. Of course, it depends whose view you take. Are we going to do this kind of big, crazy bull run at the very end of this year? But yeah, well, if I'm guessing, I think we're just going to keep doing this, kind of go up a bit and then chop solidate, right? And as you mentioned, right now as we speak, it's about $122,000 per Bitcoin. So, I could totally see us do this kind of, have another pump to call it 150-ish, and then do another round of consolidation, and we sort of just keep doing this kind of stair-stepping pattern up. And, maybe some people get annoyed because they wanted 250 or 300K, and they were kind of expecting to get that, and then everyone wanted to sort of time the top and sell the top at 250 or 300K and rebuy the bottom at 100K or whatever, right? And it sounds like maybe we're not getting that. People aren't getting what they thought. Now it's kind of more like this steady uptrend with consolidations, and the pain you pay is the patience. You just have to wait through that consolidation period before the next leg up.
That's interesting. I was talking to somebody this morning at the gym, someone I know, and I was saying the pain that you pay is the drawdowns. So, in 2017 from 20,000, the first big one I had was 2017. You probably had them further than that, but 2017, 20,000 to whatever it was, 2,000 or 3,000.
Like
and then,
3,500, whatever.
Yeah. And then, then we had 2020, drawing down to another 3,000, 4,000, right? And then
the
2021,
bottom, and then up
from
to 69
to 16,000. And so the pain that we pay to get the reward is is the patience, to your point, but the drawdown of the patience. And what you're saying is maybe the pain that we pay now is not getting the big upside or the downside. We sort of have to just wait a little bit. But let's talk about that for a second, because, what's interesting is going back to 2021, I remember at that time, that was when Saylor was really coming in heavy. MicroStrategy at that time was buying. The institutions are here. Saylor's coming in saying, all your models are broken. And at that time, the mid 60s, high 60s was not supposed to be the peak. It was supposed to be much higher than that. And I remember at that time going, I know it's supposed to be October, November of December end of the year, but like the cycles are broken and the institutions are here. And then boop, November, it just crashed. But
it all crashed out below us.
But that's because Jerome Powell came out on the news and said, inflation's ran too hot. We're way behind the curve. We're going to start jacking up rates. And they went into the fastest rate hiking cycle in history. So, what was interesting is just coincidentally, the cycle worked right with Jerome Powell's announcement. But if we look at what really caused it, was the rate hiking cycle. The liquidity cycle, right? So the global liquidity cycle. And I think a couple things are different, right? So this time, Jerome Powell is not hiking. As a matter of fact, he just announced he's cutting, which is the opposite.
Correct.
On top of that, we know Trump wants rates down 3 points. He's going to get what he's going to get. He's going to replace Powell next year, and we're probably going to cut all the way through next year, maybe the rest of Trump's term. And what's important about that is if the Fed starts cutting, then it gives cover to the other central banks to start cutting, right? So they've been waiting. China's been waiting, right? So then there's that. So I think, one, the conditions are completely different, right? And two, what I would say is maybe the halving cycle had something to do with it, where the supply shock cuts in, right? I think the global liquidity cycle has actually been the dog. the 4-year halving cycle is the tail getting wagged. But each time we have a halving cycle, it matters less and less and less, right? Because right now the institutions are here. Saylor brought them, but now they're like here. And we can see between the ETFs and the corporations, they're buying about 10 times more supply than is being created every day. And so if you cut that supply in half, what difference does that make? It's already 10 times
Correct.
more,
Yeah.
right?
And I'm with you there. I think it's fair to say it mattered more in the early years of Bitcoin, whereas what matters more now is more like an OG whale. When his coins come available for sale, like famously, as I'm sure you know, there was that story a couple of months ago. I think it was an 80,000 Bitcoin whale. Now, the rumor or the speculation might be that it was maybe an OG hodler who had died and his heirs were the ones selling the 80,000 coins. Who knows? Although apparently Galaxy knows, because apparently those coins went to Galaxy. So anyway, but nevertheless, the fact is that we're just seeing these huge unlocks, like a huge crack of coins just hit the market. And I think we're going to just see more and more of those, right? Because there are going to be all these long-time hodlers who have been sitting on coins for a long time, and maybe they're not selling all of it, maybe they're peeling some of it, or in some cases they are taking out of the left pocket, putting it in the right pocket, and they are maybe seeding some treasury company with some coins, this kind of thing. So it's a mix of things, but some of these people are now having access to financial services and tools that they did not previously, and now they want to take their chance because, hey, now it's 120K or whatever.
Yeah, and I would imagine as we continue going higher, we'll see more of those OG wallets unlocking, right? That's probably going to be something that's going to happen. Some big wallets, as you said. There was the 80,000 one, and then just a few weeks later, there was another big one about the same size that unlocked. And so how many of those are there? But I would say also, going back to the global liquidity cycle, when we talk about global liquidity cycle, we're talking about money is created through debt issuance. So you look at the debt profile, and you had about 75% of global debt termed out between 3 to 5 years. So it sort of created this 4-year cycle where the debt never gets paid, right? It has to get rolled. And so in year 3, we're having to refinance all that debt. We start running out of liquidity. Boom, you get another big batch of liquidity and we're off to the races again. So it sort of worked out this 4 years. But Janet Yellen started moving most of the Fed's debt to short-term bills.
Right.
And then Scott Bessent has also continued that. So that's completely changed the liquidity cycle as well, where now we have all this debt in short-term bills less than 1 year. And now we don't have this 4-year roll as well, which I think is also interesting. So,
yeah, I'm with you there. Like, I think it's a very interesting kind of, we're just seeing this kind of shift in the dynamic, and they're sort of looking for ways to try to, keep kicking the can. And I just don't see a principled way out, right? Like, the real way is they're just going to have to find ways to keep printing, and they're just going to have to keep doing that. It's funny, as we speak now, we're just close to 123,000 now. So it's funny that Bitcoin knows what's coming.
We might break all-time high while we're recording right here. I think also what you look at is, I think you could see in the liquidity cycle, one, but also since the ETFs were announced, we've seen the volatility of Bitcoin completely collapse. And so since the ETFs have come out, the volatility has really collapsed, and we've sort of been, to your point, kind of this crab walking higher. And we see it in the traders. So from our Treasury company's perspective, we have a lot of Bitcoin. A lot of trading companies have approached us to like, hey, we can earn yield on your Bitcoin by trading against it. And we look at their numbers, and their numbers historically are great. Their numbers year to date, not so much, because there's no volatility anymore. And so I think that's also interesting. We used to have 25% swings. Now we're having 10% swings. So maybe that's the new norm.
Yeah, I'm with you there. I think some of this for me, as I think I've mentioned this to you offline as well, that I'm a fan of power law, and I think that is an interesting way of analyzing where Bitcoin is going price-wise, that over time we should expect to see a diminishing returns and diminishing volatility. Now, listeners, don't get upset. It still does mean very, very strong returns, but it just means maybe not as crazy as it was in those early years. And so I think part of that is just, the volatility is coming down over time. But to be fair, I think, we do come through these periods where maybe the volatility kind of calms down for a bit, and then it just comes roaring back, once we have like a big run up again to, let's say if we had a big run to 140 or 150 right now, I bet you the volatility is coming back then.
Every day we see headlines about inflation and debt and diminishing control over our own money. That's why I always come back to Bitcoin, because it's built for generations. It's built for legacy. But protecting your Bitcoin legacy the right way, it's not always simple. It demands discipline, focus, and the right partner. Now, that's why I personally use Unchained Signature. It's a premium private client service for serious Bitcoin holders who want expert guidance, resilient custody, and an enduring partnership. Now, with Signature, you're paired with your own dedicated account manager, someone who understands your goals, helps you every step of the way. You're going to get white glove onboarding, same-day emergency support, personalized education, reduced trading fees, and priority access to exclusive events and features. Unchained's collaborative custody model is designed to provide the same security as the world's biggest Bitcoin custodians, but for those who prefer to hold their own keys. Now, I've been using and recommending Unchained for years. I even got my parents to set up with them. So if you want to get set up, check out Unchained Signature at unchained.com/markmoss. And as a loyal listener, I got a discount for you. Just use code MOSS10 at checkout to get 10% off your first year, because your Bitcoin isn't just for life. It's for generations.
Yeah, you're right. Michael Saylor is very vocal about, the law of large numbers, right? So the larger the number gets, the harder it is to move that number on a percentage basis. And so it's kind of like the power law, right? I do think there's a good case to be made. It's probably not my base case, but I do consider it actually a pretty big probability that I'm accounting for. When you look at technology, you have a diffusion of innovation curve, and then you also have like an S curve, right, of how technology reaches adoption. And I think what's interesting about when you look at the technology, when you look at Bitcoin, I look at it happening over a 50-year cycle, and you apply these diffusion of innovation bell curve and an S curve to it. What happens on an S curve is, once it reaches about 10% adoption, then it's the same time to get from 10 to 90%. So you have this parabolic phase. And I think also, typically you would, of course, the law of large numbers makes sense, but 2 trillion is not even a pimple. It's not even a drop to the 300 trillion of fixed income, just fixed income, not even total assets, just fixed income alone. And so, what Saylor is doing right now by creating digital credit is the most innovative thing we've seen in 500 years. And it's never been needed more than now. The total addressable market, the TAM, is bigger than ever before. And it's cracking the dam, and we could see a lot of money move into a $2 trillion asset very quickly, and that S-curve could play out, and we could potentially see CAGR, compounded annual growth rate, start to accelerate a little bit, for short term. I think I'm planning for that. It's not my base case. I think there's a good argument for that, though.
Yeah, I think I would obviously, hey, I'm highly invested in Bitcoin. Of course, I'd love to see the acceleration in the in the returns of it. But I don't know. I don't want to be the pouring cold water on the But I just kind of see it like the more likely case is this kind of diminishing or tapering down over time. And part of that is just we wish people would just come along for the ride earlier, right? Like I'm sure you and I and probably many of our friends, many of our listeners, we were trying to shout from the rooftops and get more people into Bitcoin, but not everybody listened, right? They just weren't ready to follow us. And I think part of that is also this story with the Treasury companies, right? We wish that people would just go buy Bitcoin directly and hold it in their cold card, in their multi-sig, and whatever self-custody. But we know a lot of them won't. And so a lot of them choose to buy equity or some form of debt or some form of a tranche of Bitcoin exposure because they're just not ready to buy Bitcoin directly. So that 300 trillion, fixed income pie, or even the massive equities or property market or art, all these huge markets, there's just a lot of people who they've just kind of got their blinders on. They're stuck in their ways. They're not willing to sort of come fully to the Bitcoin realization yet. And so I think it's just offering them these little stepping stones, these little pathways or ways to kind of get exposed without really, deeply going down the rabbit hole yet. Of course, we wish they would, but we understand they won't all do it straight away.
Now, I think it's interesting, and I'm curious your take on this, but Bitcoin, you mentioned Bitcoin Treasury companies. Of course, I'm working with some companies. You're working with some companies. I think, one, it's the most innovative thing that we've seen in hundreds of years. Number two, I think it reaches the largest segment of the population that needs Bitcoin that can't get access to it. Number three, I look at them as extremely good investment opportunities, where if Bitcoin is my base layer, I think these are investment opportunities on top of that. I think they should return multiples on top of that. And I'm guessing you do as well. I'll let you answer that. I don't want to put words in your mouth. But what I think is interesting is so many people in the Bitcoin community are like just rabidly against these things. They're Ponzi's, they're scams. Why would I put my money into it? These things. But yet I see many OG Bitcoiners, not just new ones like Michael Saylor, but Adam Back. I mean, there's no more OG than Adam Back. He's all about it, right? You've been around forever. You're all about it. I'm all about it. So I'm curious, like, why do you think, the Adam Back and you and I, we see that, we're excited about it, but the average Bitcoiner is like, again, sort of not just indifferent, but really against them, it seems like.
Yeah, so I think there's a few things here. I think part of it's cultural, and part of that is in the 2017 era, many of us were against all this shitcoin ICO stuff. And so it kind of, I understand where if you kind of squint, it can look like that in certain contexts, right? And maybe they are focusing their criticism on that they think, oh, look, there's a few insiders who got together, they made some, whatever. In their view, they would say, well, these insiders, they kind of got together, they seeded something with some coins, they got in on a cheap price, and now they're trying to dump on retail. That would be kind of a common argument for some of them. And maybe there's some element of that, just depends on which company you're looking at. Of course, not all treasury companies are the same. Not all are professional, competent, serious operations. But I think it's more than that. I think there's people, sometimes they're falling into an almost anti-capitalist mindset, right? Like ultimately,
yes,
most of us believe in free market capitalism. We believe in the freedom to fail. Right? Sometimes that means that, companies, you try something and it doesn't always work out. And sometimes that's like, if you talk to any entrepreneur who's been in the game for a while, no entrepreneur is like batting 1,000 and hit success every single time. No, he had to take some knocks and falls on the way there, and so be it. Like, I think some of us maybe have a higher tolerance for, let's say, business failures, whereas others would sort of prefer to, let's say, I want to keep my hands clean. I don't want to be involved. I don't want to take a risk with something that could be wrong. I just want to tell people to buy Bitcoin self-custody. And of course, look, to be 100% clear, Mark and I both tell people, buy Bitcoin in self-custody.
Start there.
100%, you should start there. The Treasury company play, at least the way I see it, is, maybe you want to, if you believe in a particular business treasury company that you think that they have a way to achieve BTC yield, and you believe in the business model, right? I think this is the other big fundamental point I would bring it back to, because instead of having the mental model of, it's just insiders getting together and dumping on the retail, think of it like this. Is there a real business model here? I believe, yes, there is. And my answer to that would be, well, imagine if you could borrow anywhere from 0 to 10%, borrow fiat and buy Bitcoin, growing at, call it 30% per year for 10 years, right? On the power law trajectory, it might be like 42 down to like 25, averaging it out, it's about 30%-ish, right? Clearly, if I can borrow at 10% and buy this thing growing at 30%, it's a no-brainer, right?
But
now,
everyone
yes,
can do that.
There are risks. Well, I mean, you're right that
everyone can do it.
Yeah, I mean,
anyone could borrow against their Bitcoin at 10% and buy more Bitcoin.
I mean, to a level, yes. Yeah, I mean, maybe there's like certain levels of how much you should do that with. Like, maybe it's only worthwhile doing a fraction of your stack, not all of it, obviously. And then maybe these treasury companies can access larger pools of capital and do it even cheaper. And so maybe that's really the game. And so, yeah, to me, it just comes down to, do you believe there is a fundamental business model, right? As opposed to it just being this kind of retail extractive phenomenon. Because
I think that's the crux of the argument. And because what I see from all the criticism is, and even from both the Bitcoin community, as well as, I mean, I'm going to call them out. Some of the writers at Bitcoin Magazine are writing, sort of FUD, antagonistic pieces to Bitcoin treasury companies, and then mainstream, of course, FT, etc. But when I read all these pieces, I'm like, even from Bitcoin Magazine, I'm like, they don't understand actually the business model. Like, that seems to be to what you're bringing up. I think that's the crux of the argument. They're not really seeing the bigger picture, and that could be because they don't understand the way the financial system works. I think that's actually part of it, number one. Number two, they probably haven't put the time in to understand what's really going on. But I think if they did, it just seems like such an obvious breakthrough. So how do you see the business model? Break that down. What do you think people are misunderstanding, and how are you looking at it? Why do you think it's such a good business model?
Governments will never stop printing money, so inflation, it's not going away. Now, if your money's not earning at least 10% a year, you're losing purchasing power. Now, that's why I talk about Bitcoin. It's the number one way to beat inflation and secure your future. And the question I get asked almost every day is, where do you buy your Bitcoin? Now, for years, I've personally used River.com, and I only take on sponsors that I use and I trust. And I trust them because River's Bitcoin only, they have 100% reserve, and they keep your Bitcoin safe in cold storage with no middlemen. And you can actually talk to a real person, a US-based support dedicated manager. Now, try getting that peace of mind from Coinbase. Of course you can't. Now, the perks, if you set up auto buys, you can pay zero fees. Plus, instead of your bank paying you, 0.4% on cash, River pays you 3.75% on cash paid in Bitcoin. So if you're ready to build your Bitcoin position with confidence, go to river.com/markmoss and get up to $100 in Bitcoin when you sign up. Because freedom starts when you own your money, and your money starts with Bitcoin.
Yeah, so to your point that you made, I think some of the articles, I believe you might be referring to one, I'm not sure, I believe his name is Emil. I think Emil wrote this article, and you might be referring to that one, but maybe there were a few on Bitcoin Magazine. But basically, one of them was just kind of, it was a little while since I read that particular article, but it sticks out in my mind because I think what he was trying to get at is he was trying to make almost like a, hey, they're Ponzi adjacent sort of argument. That's another one you've heard some people make, which is that, Right, that's Checkmate, fellow Aussie. No, I like Check. I like his analysis.
I like Check a lot. I think his
Yeah.
analysis is great.
But yeah, I do, as like you, I slightly disagree with him a bit because his view is more like, oh, it's just MSTR, maybe Metaplanet, and there's not that many others that are interesting. Whereas my view is more like, well, think of it this way, right? Like if it just comes back to if you can borrow at 10% or less and you can buy Bitcoin growing at 30%, okay, now, yes, there are risks. Of course, could the state seize your coins? Yes. Could the state try to regulate you, et cetera, et cetera, et cetera? But I think there's enough margin in this that it's worthwhile as a business. Now, where I think some people, I guess, coming to your question, which is like, why are some people unable to see it? I think for them, it's maybe they are thinking of it too much like they think of it like it's just a Ponzi. It's just raising from new capital to pay older capital, and that's all there is to the game. But no, hold on. The other part of the game is you buy and hold Bitcoin, and Bitcoin is growing. Call a number 30% per year or 40% a year or whatever, something in that ballpark, I think is quite reasonable that it grows at over the next 10 years per year. So if you truly believe that, then what's the problem with borrowing at 8 or 10%? And, I think that's where I see maybe some people are a bit misguided, or maybe they don't truly believe enough in Bitcoin themselves, right? They think of it like somehow it's like an extractive model, and it's, they're coming back to, I think their minds are going back to that extractive model ICO mindset.
I think in regards to that, it's like you said earlier, a lot of them are anti-capitalistic. And so,
yes,
because what's happening is in capitalism, we gather resources and use those resources to create more efficiency and more resources. And sometimes that doesn't work and we destroy resources and those go back to everybody. And sometimes it does work, right? And so if I wanted to, let's say I start my business on a shoestring, I bootstrap my business, but at some point I want to scale it. I might get a business line of credit. I might borrow some money. I might get a small business loan. And that business, and so I'm going to borrow on a credit line or a small business loan at 6, 8, 10%. And I'm hoping when I buy this new equipment and I scale to this new market, I'll be able to make enough money to pay for that. Sometimes it works, sometimes it doesn't. And so if we break this down, we're borrowing money to buy an asset that we think will make more than what we're borrowing for. That's how business works. That's just how it works.
That's just the game.
I might not believe in your business model, and I don't think buying this truck and this equipment is good. Nobody's going to want that product. But that's my interpretation. You can go do what you want to do. If you think that landscape business, that concrete business is a good investment, then borrow the money and go for it, right? And so I think that's number one. But I think actually, and to your point, if you don't believe in Bitcoin, none of this makes sense, obviously.
100%.
But that's why it's weird to see Bitcoiners not agreeing with it.
Yeah, I'm with you. But let me just add something to what you were saying there, because I think you're right. I think it comes to this kind of anti-capitalist mindset. And I think the irony is some of these people would call themselves capitalists, but in practice, maybe in their mind, they think, oh, that's just too easy. You should go do a quote unquote real business. Like they almost don't like that you are using the fiat system in this kind of judo move against itself. They would rather you go make widgets and turn the profit of those widgets into Bitcoin on your balance sheet, rather than use any kind of fiat financing to get Bitcoins today for cheaper than they will be in 10 years' time.
Yeah. And there's so many people, and I'm sure you've been on the receiving end of this. You've seen it for years and years and years. Anybody trying to make money in the Bitcoin space is a lot of times attacked and called out by these anti-capitalist Bitcoiners. So, for example, I remember Natalie Brunell, an amazing contributor to the Bitcoin space. She made a course for women, and it was a couple $100 or whatever, like help women, put this course together. And she got called out. How dare you create this content for free? If you remember, I'm sure you probably remember that. It was a pretty big deal. And just recently there was somebody online and he's like, man, I really want to help more Bitcoiners and I want to start this business. And I think I can create this course and I can help, business owners get into Bitcoin, but I'm afraid, people are going to call me a scam or whatever. And I was like, look, man, the way capitalism works, the way a free market works is both sides think that what the other person has is more valuable. So if the business owner is willing to pay you for your course, then that's fine by me. And then it turned into this long thread, right? And this guy then starts chiming in, and I'm not going to call him out because I'll just probably get more attacked. But no, you can't sell information that's already readily available for free. And I said, well, then how come when I was in the gym this morning, there was trainers that were training people? Is that a scam? Because those people could just go on YouTube and look at those workouts, right? Is that a scam? Well, that's not a scam because they're there with them. I was like, oh, okay. So then if you work with the people, it's not a scam. Well, you know what? I'll have to look at the offer. Once I look at the offer, I'll tell you if it's a scam or not. Oh, so you're the arbiter of truth.
Right. Yeah.
Like,
yeah.
You know what I mean? It's like the free market works because both people think they're getting the upper hand. And if both people are willing and consent, and obviously we're not for scam and fraud and all those things, of course. But like, anyway, it starts with that.
Yeah, I'm with you. And the funny thing, yes, I mean, even that Natalie Brunell episode, I was getting pulled into that too because I'd made like a free course on Saylor Academy. People were like, oh, why pay for Natalie's course? Stephan made a free one. I didn't want to attack anyone there. I was just like, look, I just made this free course. You whatever. If you want it, use it. If not, no big deal. Whatever. And I had no issue with Natalie charging for a course. You know, hey, whatever. People should just charge, and if people will pay it, you know, and you're honestly trying to educate them about Bitcoin, I don't have an issue. And I want to double click on something you were saying as well, because yeah, there is this kind of anti-capitalist mindset, and sometimes people confuse sort of open source with meaning you should do this for me for free. You know, they sort of think of it like, oh, well, this stuff is out there for free, and therefore you should spend your time to help me do it for free too. It's like, no, that's not exactly how it works, right? Like, yes, code could be open source, or yes, even a method or something could be out there for free, but if you want somebody to actually explain it to you, teach you, consult for you, those are paid, you know, generally those are going to be pay for somebody's time kinds of services.
And the so, reason why,
look, sometimes, the
reason why is what we pay for is speed and certainty.
Right.
I can go grow my own food, and I can kill it and skin it and cook it, but I'll pay to get it right now. So I can go spend 100 hours digging through all the message boards and videos, and I could find that information, but I'm willing to pay you to just curate it and teach it to me. That's how it works, right? But you know, we could spend the whole episode talking about this. It's something that's I think actually affected both of us. I'm pretty passionate about it. But let's move on to something a little bit more productive. Getting back into the Treasury companies.
Yeah,
the way I see it is there's two phases. I just got back from Washington, D.C. yesterday. I was out there, so Bitcoin and policies. We were there talking politics in D.C. I got to sit down with Michael Saylor for an hour and a half. And that interview will be coming out next week. And he's talking about stage one is get as much Bitcoin as you can. And you can do that either through raising equity, which we've done, your company, my company. You can do it through raising debt, as you said, if you can borrow cheap, but get as much Bitcoin as you can. That's phase one. But then what do we do with the Bitcoin? And so that's phase two. So once we get enough Bitcoin, then what do we do with the Bitcoin? And what we're doing, and this is what I think is the biggest opportunity in the world, both from helping others and to make money. At the end of the day, business owners are servants, right? We only make money by serving others' needs. That's how we make money, by solving problems. But anyway, so what Saylor's done is he's taken the Bitcoin, and now he's creating credit and equity instruments backed by the Bitcoin. So he's created four, right? Strike, Strife, Stride, and now Stretch, STRC, which he's called the iPhone moment. I was also with him a couple weeks earlier in New York City at the Unconference, and he asked the room, everyone raise your hand if you have a bank account. Everyone raised their hand. Raise your hand if you'd like your bank account to pay you 10% interest. Every hand goes up, right? So what Stretch is like a bank account, right? It's a stable price. It's supposed to sit at $100, and it pays, as of 2 days ago, they raised it to now 10.5% yield. So it's like a bank account. It's like a money market account. Well, how big is the market for that? Well, every single buddy raised their hand. In the U.S. alone, there's $30 trillion. In the U.S., $30 trillion sitting in accounts earning almost no yield. $7 trillion in money market accounts earning 4%. And that's just in the U.S. alone. $145 trillion globally in tradable securitized fixed income instruments. So if we can take Bitcoin and we strip the volatility out, we strip the downside risk out, we strip all that out and just provide, I believe Bitcoin's going up at 60% or 50% or 30% per year. I'll give you 10 of it. I'll handle all the risk and volatility. The market for that is massive. Now we can see this. So when they announced Stretch, when they offered it, it was the biggest IPO of the year period. They were going to raise $500 million. They ended up raising $2.6 billion. So it shows the appetite for that. It started at $87. The goal is to be at $100. At $100, they can now sell that into the market at ATM at the market to raise more money to go buy more Bitcoin. And as of right now, at the time of this recording, we are at $99.40.
Right. Yeah. So it's coming up. And I heard it recently got listed on Robinhood and stuff.
It just got announced on Robinhood. So the point is everybody in the world wants a bank account that pays 10%. Everybody wants that. Now, the problem is right now, not everybody knows about Stretch, STRC, for everybody listening. And nobody really had access to it. So to your point, yesterday it got put into Robinhood, and now all these people can now see it and have access to it. And that's the opportunity of Bitcoin Treasury companies. And when I sat with Saylor, he's like, there can be thousands of these. I'm like, how can there be thousands? He's like, well, I only do it through equities. You know how many people can't buy equities? They can only buy bonds. So why not do it with a bond? And you could do it with a 30-year bond and a 10-year bond and a 5-year bond and a 1-year. I am not going to do that, but you should. That's a $100 billion opportunity. And some people are going to do it with insurance. I'm not going to do it, but you should. That's another $100 billion opportunity. And you could do this. I'm not going to do it, but you should do that. He's like, I'm doing this. This is all I'm doing. And so anyway, I think most people don't understand the product is creating these products off of Bitcoin as a base layer. And he uses this refinery model, right? Like taking in oil as a base commodity and then making gasoline and diesel and kerosene. And not just those, petrochemicals, polyester, rubbers, plastics, acrylic. Like how many products come out of a barrel of oil? And so we take Bitcoin and then we create all these products. That's what the treasury companies are doing. That's what Saylor's doing. And I think most people miss that. There's a massive opportunity for that, and the potential to earn money is enormous.
Real estate or Bitcoin? Which one's better? Well, it's not about choosing one. It's about using both together. Because today, 60% of American homeowners' net worth is trapped in their home. And there's no way to put it to work in Bitcoin until now. Horizons help you unlock a portion of your home equity to buy Bitcoin. And it's not a loan. There's no new monthly payments, and you stay in your home just as usual, but you leverage your equity to get Bitcoin exposure. Now, what makes Horizon stand out? Well, there's no term limits. You keep 100% of the upside of the Bitcoin, and the Bitcoin is yours to custody however you want with no risk of forced liquidation. So if you've got equity, but you don't want to refinance or take on new debt, but you would like some Bitcoin exposure, Horizon could be the perfect option. So check out joinhorizon.com to learn more and get an extra $500 in Bitcoin if you use my code MOSS, M-O-S-S, and you get funded. Again, that's joinhorizon.com, code MOSS, to get an extra $500 in Bitcoin.
Yeah, and I'll just make a quick analogy, quick little fact or point. I recently spoke at Bitcoin Asia, right, and in Hong Kong. And so while I was there, this family office association in Hong Kong asked me to give a talk. So I gave a talk before the main conference, just for basically kind of 30 or 40 ultra high net worth family office people, right? And just I was taking some quick, show of hands just to see where people were at. Now, obviously, they all knew about Bitcoin. They all knew about strategy. They all knew about Metaplanet being in Asia. Very few of them, like maybe one or two of them, knew about MSTR's preferred shares. And this is a room of like 40 ultra high net worth investors sitting in Hong Kong.
At a Bitcoin event.
Well, no, sorry. This was a kind of like a side event, especially for family office people. Okay. But even at this level of, sophistication, many of them were not aware about these preferred shares yet. And so that was about a month ago, right? Or a month and a half ago. So, it just shows how early we are amongst even ultra high net worth people, still not familiar with some of these aspects of, what's going on in the Bitcoin market, and these related preferred shares, which are effectively powered by Bitcoin. And so that's just how early we are. It's just that people don't understand. It just takes time to learn. And that's why, I understand sometimes there are Bitcoiners who maybe, whatever they've got their anti-capitalist mindset about them. They don't understand. They just don't understand kind of the way the world is working, at least in terms of how everyday people and even rich people are thinking about these things.
Yeah. Last thing I want to talk about, which I think I've asked you about before, but I'd like to get an update on this, is that, the world's changing really fast. When I was in Hong Kong, we were both in Hong Kong, Asia. It was amazing. It's only the second year they had 20,000 people there. I mean, it's growing so fast over there. But I got to sit down with Balaji. We did a fireside chat in the deep.
Oh, cool.
And he said that location is more important than allocation. Now, what he means is like where you live, where you decide to build, where you decide to raise a family, all those things. The location is more important than any investment that you make, or that is your investment, right? Now, a lot of people ask me this question all the time, like, where should I live and should I move and all these things. And I want to get your opinion on that statement, location being more important than allocation. To set it up for the audience, you're obviously Australian. They can hear it in your voice. But you were there during the pandemic, and the island locked itself down. Most people are aware of what happened in Australia. I believe you were already traveling, or you got out of the country and you've never gone back. And now you're in Dubai. Dubai is this bustling hub of energy and low taxes. So coming from Australia, now living in Dubai, how do you think about location more important than allocation?
So, I mean, I don't fully agree with Balaji in the sense that I think, obviously, no matter where you live in the world, Bitcoin allocation is the most important.
Well, you could have Bitcoin but live in North Korea, and what good is that going to do you?
Well, hey, yeah, I would rather have Bitcoin than not at the end of the day. But
you'd
yes,
rather not be in you'd rather not be in North Korea.
Yeah, of course. That's true. But I think North Korea is probably like an extreme example. Most countries, yes. That said, there's a reason I'm in Dubai, obviously, right? It's low tax, it's safe, there's good quality services, it's great location in terms of flights around the world. It offers a certain kind of people that you can interact with, right? And even think about if, as fathers, we're thinking, where are we going to raise our children? What kind of place is going to give them opportunities? And where are they going to interact and meet other interesting people and smart and, driven, entrepreneurial, investing-minded people? I think the UAE and Dubai is one of those places because it's just attracting so many people, whether it's people who want to come and set up family offices, they want to come and set up businesses, they want to come to work here in Dubai, in the UAE. I think there's just a lot of these factors that are really important. And I think I would look at where, what's the direction of that country? Is it kind of on the up or on the down? And I think the UAE is on the up. Like, there's a lot of people who want to move there. The leadership are trying to make it a business-friendly place. Like, they explicitly want to make it a business-friendly place. Sadly, some of the Western countries of the world, even though
hate businesses.
Yeah, I mean, that's unfortunately that's the sad reality. And some of that is just like socialist mindset is getting into a lot of people's thinking, and that is driving like weird democratic outcomes, and it's making it very difficult for any politician to kind of get elected on a pro-business kind of platform, because there's just so much just welfare statism or whatever other large programs that the state has to fund. So for me, yeah, when I left Australia in 2021, I think I have been vindicated in my decision. Now, yes, at some point you do have to make that decision of A, am I going to stay and fight, or B, is it time to go somewhere else and find a better place? It's a different calculation for everybody, depending on where you live and what's your life situation. Are you single, married? Do you have children, no children, etc.? But yeah, I'm very happy with the decision I made. My family are, I believe, better off for it. And there are ways that you can, yes, there are some elements of downsides that you have to, you've got to take a trade-off somewhere. For example, it's very hot, or certain aspects of the lifestyle, it's not as much of a spontaneous kind of lifestyle. It's more of like a driving aspect, where maybe people in Europe, they might like to be able to have a walkable city and just kind of have that spontaneous interaction. Little things like this that you just have to trade off. But you have to make that decision on what's worthwhile overall. And yeah, so I think the other aspect of it, to what Balaji was saying, is sometimes if you want to do a certain thing, you've got to go to a certain place, right? That like, I don't know, whatever. If you want to be a movie star, maybe Hollywood or New York or these places, there's just certain places that you kind of need to go if that's the career you want to do. But nowadays in the online internet age, sometimes it is shifting a bit, especially if you can do things online, especially in Bitcoin and crypto world, then yeah, things are online, but it still matters where you are.
Yeah. Yeah. To your point, yeah. I mean, like if you wanted to be in tech and you lived in Silicon Valley 15 years ago, that'd be the place to be. Every coffee shop, every restaurant, every bar you went to, you met other people in tech, and the energy was there, the money was there, the connections were there. If you wanted to be in, I don't know, biohacking or, online coaching, you moved to Austin, right? And like all that's going on there. And so it creates these opportunities. And in Dubai, it also attracts a certain type of person. And so there's energy there. I'm guessing the people that you meet and network with are there. And so that comes into place. But yeah, that's a really good framework for thinking it through. Everything comes with a trade-off. Find out what's important to you and then optimize for those things. And we all want something different. So figure out what's important to you and optimize for those things.
Yeah, I think that's right. Like just think about what are the important key things that you need, where can you get that, and what's a good business environment, low tax, these kinds of things.
Yeah. All right. Cool, Stephan. Well, let's go ahead and wrap it up with that. I think we covered a lot of ground. Man, you're a wealth of information. Like I said, you've been doing this a really long time. Probably one of the longest going podcasts in the Bitcoin space. So everyone should check that out. We're going to link to that in the show notes down below. What else do you want to draw attention to? Anything that you're working on or want people to check out?
Well, yeah, I mean, it's just Stephan Livera Podcast. And of course, I'm always, speaking and writing and getting involved and trying to keep my ear to the ground on what's going on in Bitcoin. And yeah, thanks again for inviting me, Mark. It was great to chat with you.
Yeah, good. All right. Thanks so much, Stephan.